Well, Rob, mortgage rates are plummeting, but is the government sacrificing stocks to save the bond market? We break down the strategy behind crashing equities to lower interest rates and what it means for investors. Stay tuned.
Moving forward, we're talking mortgage rates now for thing number four. We've seen mortgage rates plummet. This is where we get into the title of the issue in the episode. Gary, thing number four, mortgage rates plummet, killing stocks to save bonds.
So, Rob, last week I wrote an article for the DKI's premium subscribers called They're Going to Kill Stocks to Save Bonds. And that is what's happening here. Basically, as Treasury Secretary Janet Yellen completed her last year in office, she reduced the duration on the US bond portfolio. And what she did was instead of refinancing 5 and 10 year Treasury securities with comparable new 5 or 10 year treasuries, she issued like 6 month paper, 1 year paper. And her hope was that by reducing the supply of the 5 to 10 year treasuries, she wanted to reduce the yield on those securities, right? So if you have less supply, your price would go up. If the price of a bond goes up, the yield goes down. And the hope was that would in turn reduce borrowing costs for corporations and mortgages. That's something that you would like if your party were running for re-election. It didn't work. They didn't win re-election. And we now have a mess. Current Treasury Secretary Scott Bessent has to refinance $7 trillion in the next 12 months. That is an enormous number. So what they're trying to do is, in order to keep interest expense from continuing to skyrocket, the current White House is trying to reduce interest rates even at the expense of the stock market. And they were really clear about this. Both President Trump and Treasury Secretary Bessent were in the press on Friday and Saturday over the weekend telling people, yeah, we're not worried about the stock market. We are going to take some short-term pain. They are talking down the stock market and trying to get money to flow from the stock market into the perceived safe haven of bonds. And what that would do is lower borrowing costs, allow Bessent to refinance for a longer period. And so when you hear the expression crash stocks to save bonds, that's exactly what this means. And as money goes from the stock market to the bond market, from risk on to risk off, that's the reason why Bitcoin is down so much over the last few days. So that explains all of it.
Yeah, Gary, what does this mean directly for the mortgage market, the rates there, just housing market in general?
So the fixed rate mortgage market tends to trade off of the 10-year treasury. As the yield on the 10-year treasury goes up, we get higher mortgage rates. As the yield on the 10-year treasury goes down, we get lower mortgage rates. So in January, Rob, the 30-year fixed rate mortgage average was over 7%. That has since fallen to about 6.6%. It may not sound like much, but that's about 40, 45 basis points, almost 0.5% of decrease in just 2 months. That's a big decrease. That's a meaningful number. And so typically what you would expect to see is if your financing costs go down, housing prices would go up, except this is a situation where, because we had interest rates go up so quickly a few years ago, a lot of people said, well, wait a minute, I'm not going to sell my home if I have to refinance at higher rates. And so it took supply off the market. What we think is going to happen is the opposite here. If mortgage rates come down another 100 basis points or so, like if they get around 5%, what we would expect to see would be more people who want to sell putting their houses on the market, and we could potentially see an increase in the housing supply. And if that happens, you're going to see lower housing prices.
Makes sense. And thanks for covering that for us, Gary. Again, this is the 5 things from Deep Knowledge Investing, the crash stocks to save bonds issue. Thank you so much for tuning in. Before we move to our last segment, one more time, be sure to head to deepknowledgeinvesting.com, sign up for a premium subscription for access to the entire site. If anything, please just give us a thumbs up or thumbs down. Let us know if you disagree on anything we might be saying. We'd love for you to subscribe to future shows as well, and we'll keep pumping out new content material for really anyone, right? Beginners, intermediate, advanced investors. I think there's something for everybody in deep knowledge investing.